Good day, everyone. Trade tariffs between the United States and long-standing trade partners, Mexico, Canada, China, are gripping global stock markets. The markets are fraught with uncertainty at this point in time, and we've now ventured down a road that many people thought we would not be venturing down when we started this calendar year. I think the implications are quite vast, and the spectrum of outcomes are also very diverse. But for investors, I think there's a number of things that one has to keep in mind as we sit here today. One, while we know the amount of the tariffs and the industries, sectors, goods, and services that are implicated today, one really has to ask ourselves about duration and how long these tariffs between these countries stay in place. That is quite unknown at this time, and there will be a lot of changes as time transpires. It is important as investors that we don't react to what we see initially in headlines, but rather apply a much more thought out and deliberate approach. As always, we have to keep corporate profits at the forefront of our investment decisions and track those where they will go, not just over a short period of time, but over a mid to long range period of time. The other thing that we have to consider a lot is monetary response by central banks. If indeed these tariffs last for a prolonged period of time, one can expect slowing of all the economies in all the countries that are implicated. But that will not be a static event. We could expect global central banks to react in kind by cutting rates to hopefully stimulate economies. Moreover, different industries and sectors are not equally implicated. For example, the United States has made mention about NATO allies pulling their weight, so to speak, in terms of defense spending. We must ask ourselves, do various NATO allies increase spending on defense? And what are the implications for companies in those respective industries? So while trade is affecting, in possibly a negative sense, many industries and sectors, it may have some actually positive benefits for other industries and sectors. The other thing that we have to consider is the market generally historically can react well to good news. It can actually also react favorably to bad news. What it generally doesn't react well to is uncertainty. And at this point in time, we are speaking to our companies, and I think various industries are still trying to put their heads around about what are the implications for their businesses going forward. As time unveils itself, we can expect there to be a little bit more clarity with respect to the companies in the affected industries, and they may have a better outlook and a better message for investors going forward. In the interim, as we entered this year, stock market valuations, particularly in the United States, were relatively high, and we could expect some multiple compression in that standpoint, but also we saw other countries' stock market multiples somewhat compressed. It would not be surprising to see a rotation of flows from the US-dominated center of the market to other countries who may not have large sectoral implications and whose valuations could actually expand from this point. And then the last factor we have to consider that goes hand in hand with growth, it also goes hand in hand with monetary response, is the currency implications globally. And for us sitting here in Canada, continued downward pressure on the Canadian dollar is a distinct possibility if the Bank of Canada continues to react by cutting rates going forward. They have already led the US in this respect, cutting rates more so than the US in 2024. And if economic growth slows considerably, one could expect that the Bank of Canada would react in kind. So those are the implications that we are thinking about today. Obviously, there's more questions than answers, but I think the 4 points that I've outlined for you actually form the foundation of where to look for answers. As always, keep long-term investment goals in mind. Keep diversification as your forefront and try not to react to the headline news that we see before us today, but rather setting out an investment goal and directive for the medium to long term. Thank you very much for your time and attention.